Hi all, I'm Cullen Haynes and this is Lawyer Lending Live. My next guest is from our own Legal Home Loans, Mr. Luke Mansour, leading broker, and he is here to talk about construction finance and all the wonderful things that go with it. 4 years experience at our company and he's a true powerhouse. Please make very welcome Mr. Luke Mansour. Luke, how are you, sir?
Cullen, I am very well. Thank you, mate. It is an absolute pleasure to be here and kick off the Lawyer Lending Live account.
Mate, it is fantastic. I believe this is our fourth episode at the moment, so they are going strong. We have Steve McMenamin on House and Land Co. before, so this is going to be a good one, mon ami. So obviously, the first question is, mate, how is life in your circle of influence, and what are we seeing in the market, mon ami?
It's good. It's good. I mean, obviously, there's an enormous amount of inquiry refinance-wise at the moment, so that's been keeping us on our toes, as you're very well aware. And heading into spring now too means the spring buying season is upon us. So the inquiry is through the roof, both with refinances and purchases. So it's exciting to see how the next sort of last quarter of the year is going to roll out.
I agree. And I would encourage people, it is 3:17 or 15:17 for all those in the army. Be sure to drop in your comments. We're live on LinkedIn, Facebook, and YouTube. And with that being said, we've got Mina, a regular of the show, Mr. Mina Abdel Sayed, saying hello. So hello to you, Mina. Let's talk about the question on everyone's lips. What happened yesterday, Luke? And what does it mean for everyone watching?
Yes, it's very, very surprising. Another 50 basis point increase. I don't think too many people were expecting it to be as high, but you know what was said is done. There's not much we can do about that. We're at the mercy of our friends at the RBA. So for those out there that are watching and aren't aware how the RBA rate increases impact lending, what we usually see is our lending partners will increase their variable rates in line with the RBA increases. So the increase is essentially mirrored on all of the variable rates. And there's normally a bit of a lag time between the RBA increase and the official bank increase. The majors are usually the first to do it, and the second and third tiers are normally a little bit behind the 8 ball, 2, 3, maybe even 4 weeks after the fact. Fixed rates, on the other hand, a lot of the banks jumped the gun at the start of the year. We've actually seen a few of the lenders now draw back on those very harsh increases. So I think it's painting a very different story now in terms of where we'll be middle to end of next year with a possible, maybe the cash rate will stagnate for a few months, see how inflation is impacted, and a possible rate decrease in the back end of next year. But it'll be interesting to see how the next 12 to 24 months play out.
It's a good question there, Luke. And I want to ask, because this is a question got asked from David Gale on TikTok, family lawyer. Shout out to David as well. He's a leading family lawyer, and he's got a movie named after him, The Life of David Gale. No relation. But the question was, rates have gone up. What happens if I have a pre-approval or my finance is in train and I haven't yet settled? What does it mean for people?
That is a fantastic question, Cullen and David.
Thank you, David.
Watching, hello. Look, it's one I've had a lot recently, and what is really important at the moment is to get your pre-approval in your hands. What a lot of these banks will do is they will actually honor the pre-approval whilst it's still valid and won't reassess every single time the RBA increases their cash rate. What's important is to get the pre-approval submitted before the banks implement the rate rise, and that way we allow ourselves to maximize our borrowing power. If we wait until the day they increase or the day after they increase, we're now subject to the higher cash rate, which means higher assessment rate and lower borrowing power. For the pre-approvals already in hand, they will only be reassessed if we look to increase the loan amount during the pre-approval period. So if you were already pre-approved and you still got 2 months left, then you need not worry. The rate on your actual pre-approval will change, but the assessment won't unless we seek to increase the amount.
And what if I'm one of those wily lawyers that's decided to do a hybrid loan and split it midway through the application after the rate rise?
Yeah, that's a great question. It depends on the lender. Some do things a little differently than others, but most commonly, if you also look to alter the structure, that will trigger a reassessment, which means we're now being assessed on higher rates. And again, that could impact your borrowing power, especially if you've just purchased and you're in your cooling off, waiting to go unconditional. We don't want to see our borrowing power decrease and cause issues in moving to the unconditional approval.
It's a good point there, Luke. And if you've got any questions, evergreen, put them in the comments. And if you've got something more bespoke, DM Luke and he'd be happy to take it on board. Now, this is obviously a construction financing segment. So we're going to go deep into construction finance. Let's talk about it. Cosmetic versus controlled. What are the two? What do they mean? And what do people need to know about the two, Luke?
Yes, there's a great deal of construction questions going around too at the moment, especially with the exorbitant increase in cost of materials. Look, I guess at the crux of it, there's essentially the cosmetic renovations, which are typically non-structural. These can be funded via a stock standard equity release, so basically accessing the available equity in your property. The best part about cosmetic renovations is the banks will give you control over the funds. If we look at the structural renovation piece, whether it be adding another level, adding a couple of rooms, or even a full knockdown rebuild, that's when we typically find that the banks will prefer to control the release of the funds. Normally, there'll be a fixed price building contract available, and the banks will pay the builders directly via the progress payment schedule. It does make things interesting in the current climate. The cost of materials, it seems like it's forever increasing. And we're actually seeing a lot of our clients submit variations because those fixed price building contracts are no longer actually fixed as they say they are.
They're very much a non-fixed contract, to coin a phrase, I'd say. And God bless them. There's some banks that do construction lending well, others okay, and others charge some exorbitant fees or fees every time you draw down. Is that not the case, Luke?
That is. One of those lenders is actually among the big five. And it's important. It's important to think about too, because whilst the lender may be very good in the construction realm, when it comes to verifying income, if you have a bespoke income, such as a partner or a barrister, they may not necessarily understand your income. So they could be awesome in the construction side of things, but not know how to assess your income. And again, we'll run into hurdles. So coming to us, we've got the specialist knowledge and can access the lenders who do both very well.
Correct. And you've done this, so has Yarko, Mitch, and Luke and the team. You lean on what's called the managers in the banks and the credit managers to overturn things that if you'd gone to a different broker or bank, just put their hands up and go, this is too hard. Because construction lending, let's face it, is a bucket shop at the best of times.
It is indeed. Yeah, it's not always straightforward. And that's why with our platinum accreditations as well, we can access the senior credit managers and get their review and sign off both pre and post submission as well.
I love that. Platinum, for all those who don't know, top 1% of brokers have it. And it allows us to get preferential rates, credit policies, and turnaround time. So hand on heart, we can say we are elevated to that 1%. And lawyers, you all know you love getting the edge. So speak to the broker who can get you the edge. And on that note, you actually spoke to a client very recently, just before we got on here, that said, their broker said there's no way you'll be able to get an LMI waiver at 90%, something we specialize in. What did you say to that client who told us that their broker told us this erroneous information?
Well, I had a bit of a laugh, and there's a lot of brokers out there doing fantastic jobs.
They do a
but
great job.
when it comes to the legal world, not every broker is actually aware of the benefits that our legal professionals are eligible for. So I had a bit of a chuckle when I first heard this and said, look, you've come to the right place. We've got the perfect lender for you. We've since submitted the application, and the approval will be coming through at the end of the week, albeit with the 90% LMI waived.
Correct. And on $1 million property that's $20,000, what would you spend $20,000 on? New car, renos to the house, 100,000 must sticks. I think in 2018 we worked out that's how much you could buy. Whatever you want, but don't spend it on LMI, please. And when Luke says the perfect loan, what he actually means is not unsuitable in banking parlance. So there you go. Mina Abdel Sayed, thank you so much for this question. How badly... We'll get back to what we were talking to in a moment, Luke, but Mina asked, how badly will this affect people, the RBA rate rise, trying to buy a property, whether it's for home or business use, especially for first-time buyers? What effect has this rate rise meant on repayments and all the rate rises to date?
Yeah, look, it's really hard to pinpoint a dollar figure on the impact, only because if we've got someone taking out a $3 million mortgage, a 50 basis point increase is going to be a lot more significant compared to somebody looking at a $500,000 mortgage. Usually, every increase, it could be 50 grand, it could be 100 grand decrease in our borrowing power. But that's what we're here for as brokers, to help guide you through the process. And we can even run high level numbers ahead of these rate increases to try and guesstimate how our borrowing power is going to be impacted.
Yeah, fantastic. I think an AFR article to put a number on it, the 50 basis point recently on $1 million home is about $288 to $300 per month. And to date, we're looking in advance of 1,000 at least. So great question, Mina, and something everyone should be asking themselves. Feel free to drop more questions in. Any easy questions, I'll answer. Any tough questions, Luke will definitely have a crack. Progress payments, construction, Luke. What are they? What do people need to be aware of when they're coming to a bank for finance on construction?
Yeah, the progress payments is really important when it comes to construction lending, especially in the fixed price building contract world. A lot of banks prefer to see 6 or 7 progress payments. That seems to be the sweet spot. We have in the past had builders come to us, and there might be a big schedule of 20 progress payments. So it does take some work, both with the bank and with the builder, to get them to come to the party and agree on a 6 or 7 progress payment schedule. Essentially, once we get to every stage, an invoice is issued, sent to the bank, and the bank will pay the builder directly. And it covers right from when the slab's laid until the final nail is put into the house and construction is complete.
Fair enough. And when clients ask, how come I can't have my builder do 15? What is the bank worried about when we get those requests for builders 15, 20, 30 progress schedules? What's the bank actually worried about? And this is a good one that lawyers should tune into.
It is indeed. Look, the main concern is that they're worried about the cash flow of the builder, and they feel as though the builders are trying to cash flow the build, essentially, to put it in those terms. What the banks prefer to see is the builders know how to manage their funds. They've got access to the funds required for the materials throughout the process, and they're not relying on the bank. They've got access to the materials in their own means, and I guess it's a lower risk from the bank, not cash flowing the bill.
No, it's a good point. And one of the bank managers told me in a very heartless way, but very true way, our client is your client, not the builder. So we're not going to go out of our way to fund the build and their cash flow. That is not our responsibility. To a good point, I'm sure many lawyers would agree. That is a fairly conservative assessment on the part of the bank. 90%, obviously, lawyers under certain conditions, those conditions being a practicing certificate can access it. what does it mean in terms of either going that cosmetic route on equity release or funding the end value of the property on that progress payment route?
Yeah, I mean, to give a quick rundown on both scenarios, if we look at the cosmetic side of things, to provide an example, if your property is worth $1 million and your existing loan is 700,000, we can essentially utilize the equity right up to 90% and still have LMI waived. So we can take the total lending to 900,000, and that additional 200,000 will go straight into one of your offset accounts and will be free for the customers, or the clients, I should say, to utilize at their discretion. We're not relying on the bank to pay builders or control the release of the funds. Similarly, when it comes to the structural side of things, especially for a new land and builds, the 90% loan to value ratio is calculated on the end value of the property. So once we've got the construction contracts, a valuer will pop out to the land or the property if it's going to be a knockdown and rebuild. He'll give us his estimate of what he feels as though the property will be worth post-construction, and the bank will lend 90% against that end value amount. I do also get this question quite a lot. I'm looking at land and build. How many loans can I have? Is it just the one? It's usually normally set up as two separate loans. You'll have the 90% against the land value and 90% against the construction value. Once the property has been completed, we can then reapproach the bank and look to amalgamate the loans into one nice and easy loan facility.
Very good. So lawyers watching or legal professionals with a practicing certificate, you do get that edge in being able to either access equity up to 90%, which is important with rates going up and values going down, and obviously the cost of the build itself becoming more expensive. So I'm endeared to what you're saying, Luke, and some very cogent insights there. You called clients, customers. You've been hanging around Mr. Michael Piper, the state manager of CBA, too long. Put it in the comments, guys. Is it best to call your client customers or clients? I'd love to know. And Mr. Mina is saying, thank you so much for answering your question. It's our pleasure, Mina. And we encourage everyone to obviously put their questions in there, because it is currently 3:33 and we are still live. So make sure you put your questions, so this powerhouse, in a once of a lifetime opportunity, at least today, you can answer those questions. Let's talk about how it's structured when we are drawing down on the loan. Is it interest only? Is it principal and interest? I'm hearing two sides of the equation here, Luke. Let's set it right. What are people paying during the loan, and what happens when it crystallizes and when it settles full?
Yeah, another great question, Cullen. You're full of them as always, mate.
Please.
Yeah, look, usually during the construction period, the repayments are interest only, and they're only on the amount that's been drawn down. The rate will 9 times out of 10, or I should say 10 out of 10, be variable during construction, and the repayments don't actually move to principal and interest until the property is complete. And that's when you have the opportunity to then lock in the entire mortgage, or you can then split into part fixed and part variable. And that's when you'll start paying off the principal loan amount as well.
So the reason why the banks do this and put it as interest only during the build, what's their rationale and why they allow that, Luke?
Look, I guess they understand during the build, 9 times out of 10, the clients aren't going to have somewhere to live. So they'll be renting or maybe living with family if possible. They understand costs are going to be high during the build. So putting the facility on interest only minimizes the out-of-pocket expenses until the clients actually have the opportunity to then live in the property and make the most of it.
It's a good point. It's a very good point. And someone comes out of the blue, one of our leading lawyers, and asks, I'd like to fix my construction loan during and after construction. What would you say to that? Someone wanting a fixed portion on their loan during construction, Luke?
I would say it's a great question. And I would then proceed to say that we'll have to consider fixed options once the build is complete. if we do have a land and build package, we can fix the land loan. That is possible. But on the construction side of things, we'll be stuck with variable rates until the property is complete and habitable. Yes, I know it is a little bit annoying because if the construction takes 6, 9, 12 months, the fixed rates are going to be completely different come the end of the build.
Correct.
Yeah, it's something out of our hands, unfortunately.
Yeah, and with all these variations, the banks wouldn't be able to get it around their heads to fix that with all those things changing. Very, very good points you're making there, Luke. Banks and construction fees. Should people be scared that they're accidentally going with a bank? Do many banks charge these fees?
No, I mean, it's a bit of a mixed bag, to be honest. A few of the majors do it very well in that the fees for construction lending are quite cheap, or they're on the smaller side. There are, however, some other lenders out there that will charge a fee every time they need to make a progress payment. So if you've got 6 or 7 payments, you could be paying upwards of a couple of thousand, depending on the fee at each stage. Similarly, some lenders out there also like or prefer to organise a valuation at each progress payment. It's not very common. There's only a handful of lenders that do charge the fee. However, those fees will add up at the end of the day as well. So best to identify a lender who doesn't charge those fees, because we know that the costs are not exactly going to be cheap at the end of the day.
If only there was a mortgage broker that just specialized in lawyers that had 30 lenders on our panel that could do that for you. Well, I'm looking at you right now there, Luke, so that's good. Yeah, notable case studies. You've done many construction loans for our valued clients. Any left of center ones that come to mind that we can anonymously chat about that settled, or interesting ones that people could learn about? They're going, oh, I'm doing something similar.
Yeah, look, I do have one actually. This particular client settled in March with one of the big 5 majors. Fortunately, so I know I did say earlier that majority of the time the banks will prefer to control the release of the funds for construction lending. There is one very bespoke policy with one of the majors where they will actually release the full construction funds directly to the clients, and they then have full control over the cash to make payments to the builder. It is a very, as I said, bespoke scenario. We do have to meet specific LVR guidelines, loan to value ratio guidelines, and the lender calculates the loan to value ratio based on the land value only. They won't look at the total end value of the property. So there are a few hoops that you do need to jump through, but it does make life 10 times easier having control over the funds yourself. And, you know, if there are variations along the way, it's a lot easier to address without the bank needing to control the release of the funds.
That's game changing. And it makes it, I guess, less onerous from the client and or customer's point of view to be able to move forward with ease. Yes, yes.
It certainly does. And on that one, I did forget to mention, we were able to get a 1-year interest-only facility set up for this particular client, which meant that the funds that were released for the build were put straight into the offset account. It was a variable loan, and therefore our client was making no repayments on the release of funds until she actually needed to make payments to the builder. And again, the interest would only be charged in that small amount that we've drawn down. So it really did save on a lot of time and a lot of costs for our client.
That's very, very admirable that you did that for your client, Luke. And that would have come up with the conversation with the credit manager and our manager to get that over the line. And so anyone watching, if you've got anything similar, please reach out to Luke. But we've got about 5 to 6 minutes left. So I would encourage anyone, put your questions in, anything you want to know about construction lending or finance, put it and we'll do our best to answer it before we end. Verifying income, Luke. Obviously, someone going into a house and land construction loan. That's one side of the equation. And as we said, it is quite bespoke in and of itself. But our legal professionals, there are 4 types of lawyers that we deal with. PAYG lawyers, partners in the firm that are considered self-employed, barristers, and leading sole pracs and firm owners. Now, those middle two, barristers and partners, get paid in a very unusual way. One is a sole trader, RE barristers, and another one is usually either a salaried or an equity partner. And they are considered, even if you're newly minted, congratulations, but you're going to find it very hard to get lending. Why is that the case? Why is it so hard to get lending for these, 2 types of legal professionals? And how can we assist? And what's the solution, Luke?
Look, it's a good question. I'm sure a lot of the credit assessors sometimes would be asking similar questions on how do we understand the income? Some banks, we've had our partners come to us and on the salaried partner side of things, they've been treated as self-employed with previous lenders. And usually what that means is getting 2 years worth of financials together in individual tax returns.
Yes.
With some of our lending partners, especially this is most, applicable for the newly minted partners. There are lenders that only need a CFO letter or letter from the HR confirming remuneration and 3 months bank statements confirming the payments. They will take that as the source of truth for the partner income, and we don't need to go into the realm of providing tax returns and taking the average. So it really does help maximize the income we can use, because usually we do see quite a large jump from income pre to post partner. And similarly on the barrister side of things as well, a lot of lenders will prefer to average the last 2 years tax returns. There are lenders out there who will look at the most recent in isolation. And a lot of our barristers, typically, there's a large uptick in income from year to year. So again, that really does allow us to maximize our borrowing power, which in the current state of affairs is quite important, because as these rates continue to increase, our borrowing power will continue to decrease. So finding a lender who will utilize the greatest amount of your income really is becoming more and more important as we get further into the year.
Very well said there, Luke. And look, we are very free with our information. I have a big thing in our sales team. If anyone asks a question, tell the client the rate, tell them the bank. On that latter point, because I often get people asking on these things, which banks do it and which banks will waive it and allow the partner income, etc. What I would say is, when I do tell you, you're going to speak to someone at retail level in the branch, and then I promise you, they're not going to know what they're talking about. And we've had many instances where clients have come to us and saying, "Oh, don't bother with this bank." And it's like, actually, we can get it done with this bank, because a lot in life, it's not what you know, but who you know that counts. And it's definitely the point with these banks as well. They are big beasts. One in particular is the highest payer of GST in the country. So they got so many staff, it's hard to keep track of everyone. We've got them at our fingertips, and there's very different layers in the bank. It's like an onion. And a nice little segue into the multi-layered approach of the banks. But just a quick shout out, Josh Jaramillo, broken out our team, has said Luke Mansour is definitely one of the brightest construction lending experts. Great listen, and kudos, gents. Thank you, Josh. Known as the turtle in our team, because he's slow and steady, and he definitely wins the race. So great job there, Josh. I want to talk about the different layers in the bank, Luke. Retail level, they're talking to someone about their construction loan. They're a high net worth, earning maybe 500,000, or they got lending above 3 million. Should they be talking to the person in the branch, or is there another section of the bank that may be better suited?
There definitely is, and they are most commonly known as the private arm of the banks. Certain private lenders have minimum lending requirements to get into the private arm. Some are upwards of 5 million, which is quite exorbitant, especially in the current market. Others, they more so look at the income because they like to see the future potential of borrowing for their new private clients. We've got access to all of the private arms of every bank that offers the service. So really every lead that we get and comes in, we're coming back to those that qualify for the private arms with the one that's got the best policy to fit, especially when it comes to construction lending, because again, some are a lot better and more understanding than their competitors.
Yeah, it's a good point you make on that front too there, Luke. In terms of, I guess, the most important thing people should be walking away with from this construction financing segment, if there's one thing people watching would leave, what's one thing you'd say as a lesson, or I guess a tidbit or a 1% of people could walk away with?
You like to put me on the spot, as always,
You know,
don't you?
of course there, Luke, of course.
No, well, look, one piece of advice would be come and talk to us. We've seen it all, all walks of life, all levels of law, and all types of inquiry, construction related, from owner builder to fixed price building contract, cosmetic renovations. We're one-stop shop in that regard. So it really is important. Speak to a broker, speak to us, and we'll be able to see you in the right direction, because signing along the dotted line can be very nerve-wracking, especially when you haven't been given the correct advice.
No, correct. And not to denigrate any of our fellow broking colleagues, they do a great job. 70% of loans are written through brokers that go to the banks. But as we said, we're the only one that specialize in legal professionals, are platinum brokers. And like all brokers, there's no fee for our service. Is that right, Luke?
That is correct, sir.
Doesn't come out of your rate or repayment, which is fantastic. Luke, thank you so much for joining Lawyer Lending Live. I've got to let you get back because I know you got a few meetings with clients straight after this. Appreciate you sharing your insights, and be sure to connect with this powerhouse on LinkedIn and send him any inquiries that you have. Thanks so much, Luke.
Thanks, Cullen. Pleasure again.
Good man. Thanks so much for joining us for another Lawyer Lending Live. We come out on Wednesdays, every Wednesday, and we cannot wait to see you next Wednesday. All the best, everyone. Have a great afternoon. Make it count.